Everybody, how's it going?
Well, it was better before today.
Or the silver.
Yeah. Well, you don't know where the top is until you get
Well,
there.
hello. My microphone was off. It took me a little bit to figure it out.
Hey, all right, good. I'm glad.
Yeah.
I've got a new computer myself here, so I'm trying to figure out how this is
Windows
going here.
11.
Yeah. Oh yeah. Exactly. Yeah, it's not my favorite at the moment, but it is what it is. I also got like a new monitor stand, so everything's a little bit different. It's like, yeah, crap everywhere. So, anything you guys want to cover specifically here before I get rolling? I was going to start out with the VIX.
Right. That sounds good. Yeah.
That's fine.
Yeah.
Okay. All right. VIX, and then I'll do some index stuff. Okay. Cool. All right. Let me get my stuff. All right. You guys should be seeing my chart here. At least I hope you'll be seeing my chart here.
I see something.
Okay. Cool. Okay. So what this is, I shared this a little bit earlier today. This is a chart of the VIX, but it's inverted over the S&P, or sorry, over the
Nasdaq.
Over the Nasdaq. Yeah, I think it looks a little better with the S&P. So I'll actually look at this like at a weekly level. Hopefully this looks a little bit better. Sorry, 1 second. Let me turn this crap off. There you go. Okay. So basically, what's going on here is I mapped the VIX here with the blue lines, and then also the UVIX here with green. And I tried to do it in a logarithmic way, so that hopefully will help with any smoothing or any sort of irregular bumps like that. I know this looks a little crazy here, but bear with me here. So pretty much what we're trying to do here is we're trying to see if there's any like correlations here. And this is at the weekly level, of course. And you can kind of see here that UVIX has gotten crushed. Same thing with the VIX, but UVIX always seems to kind of snap back here, and it's always a little bit delayed because it's the forward curve. So you can always see here that last time we had our decent amount of selling for that week. We had the VIX jump up to about 23, and then we had UVIX almost double. So I don't want to say it's like a one-to-one function, but there have been a lot of questions out there about UVIX and kind of how that works. And if I kind of zoom out here and look at the daily levels, you can kind of see here that every time we have these really low lows in the VIX, you always seem to get just maybe even a little bit more ground that's covered at the top here. But you can kind of see that VIX kind of rounds out where it starts to peak up a little bit. And right now I think we're seeing one of these more like extreme low type of events. But we've also seen a lot of volume over the last really since like October here. Decent amount of selling, just distribution in general. We've also had a little bit of trouble getting higher in the indexes. I still think that it's so close to 7,000. What's the difference? Yeah, I think that like any major sell-off or whatever, usually you get to these big, usually get to like these big levels, and it kind of backs off a little bit. The only thing that's looking weird is there's a lot of buying up here, and I wonder if this is just retail being dumb or if this is actual reaccumulation. And we don't really know until after, right, whether it's reaccumulation or not. But part of me kind of thinks that there's some rebalancing going on with like some mutual funds and just a lot of people that almost like have to make trades at the end of the year to kind of balance out their books. If we kind of zoom in a little bit here, you'll see it. See when it adjusts. There's still a lot more selling, but a lot more of this like dip buying kind of stuff. So it kind of just looks like there's a lot of people just kind kind of buying overall just to buy. But so what that means for the VIX here is that we do see some spikes here to kind of like I kind of feel it's like a heart beating, where it gets a little bit crazy when you start running a mile. So it's always kind of reactive, and we always kind of see this little dip here, sorry, not dip, but we see this kind of surge in the VIX when we get at least like one day that has been a little out of character. And relatively speaking for volume, it's been really light. But to be fair, this is the end of the year, so there's a lot of stuff that happens at the end of the year with low volume that kind of washes out. So I guess the long story short here is a lot of people have been asking about VIX and kind of what we see is going to happen for VIX. And I think that overall what we're seeing here is we're just seeing just lower lows because people just have no fear, or we've been grinding along for the last couple of days now, like since Christmas, and that's also had a lot of like put expirations at the end of the year that are dropping off the books here. So I think that might be part of the reason why we're seeing some lower VIX. But for those who are still holding UVIX, when you do get this big jump, we only went down a couple percent. What was that, like 5-6%? Yeah, like 6%. So it went down about 6%, and the VIX jumped up here and it's peaked to about like 26, which isn't crazy, but it's not nothing. And the UVIX here went up to about 1280, and it's just been kind of crushed ever since, but it's still the forward curve. So when the year resets, we'll probably have some more to look at there. Any questions about the VIX, or does this look stupid? Okay, cool. Yeah, I just wanted to make sure I covered that for everybody.
The only problem is if you're sitting with it from 20.
Yeah. That's right.
It could double and you're still at 12.
That's true. But I always think about like some of those really fun days we had back in April.
Mm-hmm.
So for example, we had let me take off let me hide some of this here. So if we're looking just like straight at UVIX, we had this UVIX itself was at like this 28, then all of a sudden after a couple days, now we're looking at it at, what was that, 92? It's crazy. So that's a big jump. And sure, that was a pretty crazy, couple days there from like that Friday, Monday, Tuesday. But still with that, what was that, like 20% from that? Yeah, 22%. Just with that drop there, it really kind of accelerated. So that's kind of like, you think about the magic of compounding, right? And you think about how sometimes you get in trouble with, holding shorts and you get that decay after a while. But I do feel like, the shorts recover a lot faster than underwater longs, just because they're coming from nothing and then going to something, as opposed to coming from like 100 as a price or something and then dropping, 30%. And then if it's leveraged, it's even worse. So it's like you have your small precipitous declines versus your major sells. So even though holding short sucks, I feel like the math works a little bit better if you get a real sell off. So I do think that the UVIX has been declining for a while, and it's been kind of a pain in the ass. Not gonna lie. I still think that there is room for recovery there. I feel like it is tracking the S&P really, really closely, and you do see some decent jumps here, like going from like 10 to 14, that kind of thing, even with just one day. So we just need let's say like a 10% kind of thing here to really get out of the hole, and I think that you'll see probably a lot more than that once we get the end here. I don't think it's quite the end yet, but I think it's getting pretty close here with some higher volume and some distribution. At least like a bull cycle end, if that makes sense.
Well, if we could get a day like we had today in platinum and palladium, then you would have something.
Yeah, there you go. That's right.
Yeah, $300 in one day on each one of them.
Yeah, that's crazy. I'll definitely go through the metals charts here in a second, but it's been a pretty interesting day, I'll say that.
It was an interesting night, is what it was.
Yeah. Did you get any sleep?
Well, I slept, but I mean, because I'm sitting with options, so there's nothing I can do.
Oh yeah, yeah, right.
You know, I'm watching it go up, and then I'm watching it plummet, and I can't do anything till by the time 9:30 rolls around.
Yeah,
The move is done. You know,
yeah, yeah.
I mean,
That is what's unfortunate.
you know, so yeah, this, I'm just sitting there trapped. I'm not gonna short a futures contract that's you know, $20,000 a for each contract.
Yeah, which is a lot. Yeah. Sorry, I'm trying to find my one chart here for you guys. I had it. Sorry about that, guys. Yeah, you're right though. The having a futures contract, going nuts. I mean, that's you want to talk about not getting any sleep.
I mean, it was nice while it was going up.
Yeah,
All those
yeah. I mean, I
days.
would think that some of the volatility was helpful, right? Or at least like for the implied volatility on the contract.
Well, I mean, I had written one call, but it was way up. So, that was like $250 when I'm losing 3,000.
Oh yeah, yeah. Not good. Not good.
I mean, all my long options are very deep in the money. You know, they're like,
Yeah. Okay. Well, so let's talk here real quick about what might happen here. I'll start out with the Nasdaq because I feel like the Nasdaq's a little bit more bearish. Even though we do see a decent amount of buying up here, that is on lower volume overall. So kind of what I'm thinking here is like we might have like a larger sort of wave 4 happen maybe, where it might be like, sorry, let me use a different. Kind of think we might have something like this, where we get this, ABC after ABC. You can kind of see it here. We might see something like this, but highly likely you'd see something that's kind of like that. You see like a bunch of ABCs within it. So what I would recommend, and it's not advice if I could say recommend it. I guess I would recommend that you look for pivot points at like 50%, or like fib retracements at 50%. Like as an example, I'm gonna kind of zoom in here. So let's say we do get this bearish sort of move into January here, and it might take a little bit longer. I mean, these guys have been stair stepping this thing down for a while, and people keep buying, so there's no reason to sell it down even more when the selling's good here. So what I would say is kind of look for like these 50% retracements. So you might see something like this, where you probably see this overnight, and then maybe see this over the next couple days, just some distribution or whatever going into the 31st. I'm sorry, I gotta fix my camera. Looks a little weird. There you go. But yeah, so I do think that even if this ends up being like a bullish structure, so for example, let's say this doesn't materialize, and you start to see something sort of like this, like a bounce point kind of here, like a big one. That could be like an inverted sort of head and shoulders. That could set it up for a bullish run. You could also have, and this is the more bullish scenario, you could also have something sort of like this, where you get this continuation up and it's not a flag anymore, and it ends up being like a weird, irregular sort of wave 4 pattern. And stop me if this doesn't make sense, by the way, because I do know that sometimes I go nuts with this stuff. Okay, so longer term, we could see something like this, which is like a wave 4. You could see a higher high, but the Nasdaq just isn't really looking, like super strong to me right now. If this was going to happen, what I would say to look for is something like this, where you see a like a pullback. to something like this, where you see like the 50%, like this, around like the 25, 200 level, even just like the 25,000 level, it seems to be a pretty big, pretty big magnet here for sells, or at least like, it gets sold down and then it gets bought up right away. This to me would be like the final leg up here for some sort of like irregular correction. Now I don't want to flip to the S&P just quite yet, but the S&P kind of looks like an ending diagonal. So that's and I will show that here in a second, but it does kind of look like a if we do get this sort of pullback here, and you might get this sort of extension down here, this is kind of where I would draw the line for this is where I would draw the line right at like 25,000, where it's kind of like the bifurcation point for the range. So if we do head lower, pierce through, that kind of thing, then it's a different story. Then you might be looking at like a continuation of a C leg here on the downside. So so that's sort of the bullish setup there. But the bearish setup kind of looks a little bit more like we're starting this C leg down here over the longer term. So that's kind of why I was trying to show this before, where this might be like a proper sort of bull flag longer term here, where you see you kind of see, or bull flag channel, whatever you want to call it. But hopefully this makes sense, where kind of just like jumps off the page here, where you do get this kind of bifurcation point here, but you also have this like resistance and support. Oops. This resistance and support kind of box here. Even though yes, your point of control is high in the range, there was still a lot of distribution up here. But right around this area, I still think that like above it is a buy, and below it is a sell. I'm trying to simplify it a little bit more, for everybody else, instead of like trying to, figure out the whole pattern and try to, digress and, do all this stuff and things. I'm kind of thinking like, well, maybe it's easier for people to understand, like, if price goes above this, then it's a buy or it's a sell, or, below, that kind of thing. The only other thing that I think is a pretty big flag, no pun intended, is that at the weekly level, here, at the weekly level, this A13 here, this is a pretty big weekly. This is like a weekly. Sorry, I'm gonna get this junk out of here. Sorry, my kids are all home and it's anarchy and chaos around here. I hear fighting, all sorts of stuff. So I think that that this A13, what this means is this is like a DeMark indicator at the weekly level, which just signals exhaustion. I'll show you some of the other charts and stuff that at the daily level that have a bunch of these that fired, and you can kind of see here that like it's right at the top of the range. And if you look at the S&P, like it just happened here, this A13. And last time we had one of those, well, we got a decline. And also before, like when we had one back in July of 24, we had a decline. They don't happen like a lot, but you can kind of see that these do have some sort of pattern where we saw this exhaustion count here, where we got this 12% decline back in January 22. Once we let's see here, we also had this kind of after a couple more days here, we had another 10% decline, and this one was a big one. This was the 20% or 22%. So I'm kind of thinking here that even if we do have a 10% decline, all it does is test the 200 daily moving average, and that's a buyable dip as far as I'm concerned. Because shit, sorry, I'm gonna kill him. Mom's getting mad. Sorry, guys. Okay, so kind of what we're looking at right here, even if we do have like a 10% correction, I think what we can do, not what we can do, but again, it would be a buyable dip. I think you'll get a lot of support, maybe right around this like 6,200 level, 62,150. Yeah, something like that. There we go. And I think that this would be reasonable. when you kind of back it up a little bit, well, I think what we might actually see going into like 2026 is we might see maybe like a head and shoulders kind of pattern here developing, where you could see. I'm sorry, guys, my kids. I'm going to have to kill them. So let's say we actually do get like a really nice decline here. Probably not nice for a lot of people, but let's say we actually do get some sort of actual some sort of like actual decline, and then we get like a kind of a retrace. And this is kind of like how 2008 happened. Like it kind of feels like around like 2007 right now, where like the party's still going, but the money's still flowing in somehow, some way, and we get some sort of like major topping event, but it usually takes a while, like a year. I mean, to be fair, we've had it's only really been 8 months here of just solid up, but that that big decline in April, that was pretty impressive. So if we do see something like this develop, then you could see like just sideways chop for quite some time. And again, like I don't want to this is not a matter of fact here, but I do think that like what we're starting to see here in the news, like we're starting to see a lot of like the unemployment news and stuff, like people are struggling with prices, price increases and stuff like that. And I'm hearing it too, from friends of mine and stuff like that. So I mean, there's sales are down in certain sectors. We're just starting to see a little bit of a slowdown. So I think that overall, longer term, we might see something like this, and it might make some sort of head and shoulders pattern. But watch out for symmetry at the longer term. If you were to look at something like the Nasdaq, the Nasdaq here has this like kind of weird looking. It's it's just weird because like I'm looking at this chart like it's at the top of the world, right? And it's kind of making like a triangle almost up here, and those can be reversals. They can also be wave fours, that kind of thing. But I always err on the side of caution, like in just symmetry in general. When you're especially when you're looking at like the daily and above, because the market really doesn't move all that fast. So you kind of see like a megaphone pattern here, and the next step to a megaphone pattern is likely you'll get some sort of retreat. So let's say you get like a blast up, like a final sort of run, then you could have some sort of larger ABC sort of correction here, and that might actually give you that's huge. Okay, 40%, that's big, but still, relatively speaking, I mean, revising the or getting to the like the 1660 or 16600 level for Nasdaq seems to be a pretty good like reset point for a lot of longs and a lot of different strategies and stuff, and also kind of like takes us back to not only the April bottom but also to like the top here that we had back in like of 21. So does that sound too crazy, or is that like too bearish? So
time will tell.
Check on that. What was that?
I said time will tell.
Time will tell. Yeah, time will tell.
I mean, I've been catching Tom Lee on a couple interviews, and he's looking for a 10 to 15% decline in the first half of the year.
I think that's reasonable.
And then a rally in the second half that will wind up higher for the year.
Okay. Yeah, I mean it's reasonable. I think like I was showing you guys with that little triangle here. Like we do have a complete 5-wave set, and we also have I can pick out another 5 waves here in this big wave 3. But to be fair, going backwards, I think this is also just one big impulsive wave, and this might be like we might have had that COVID sort of like wave 2 kind of drop, and then we have this we have this wave 4 kind of this 9-month kind of lazy wave 4, and then it takes off after that, and this this might be it for a while, but not sure. I still think that bears are always early, guilty as charged, but bulls always stay way too late. And the one thing that I always remember from my studies as a young man where how many times that we've gotten to this point where like markets are just completely overextended, but there seems to be that tale of two cities where people think that, well, we're just getting started, you know. Then there's the other camp that's like, well, we've already been started for 4 years. Like how much more can you get? And that's where you need to start looking at these averages and like the longer term things. Like if you guys are familiar with the Buffett indicator, you know, like looking at the GDP to actually, you know what, I think I have it here. Actually, I think it's a good thing to take into account every once in a while. I mean, you know, that guy's, you know, the epitome of patience. But if, here we go. The guy's the epitome of patience. However, if you look at something like, oh god, where is it? Did I take it off? No, crap. I had a trend. Sorry, let's see if I can find it. I gotta get my act together here. Yields. Nope, nobody cares about yields. Okay, no, I don't think I have it. But anyways, like the Buffett indicator is pretty crazy when you see like when you see how all that you know kind of comes out, and I guess it's like the highest it's ever been, you know, and like the Schiller PE is like right at where it was in 1999, you know, so it's just expensive. And I think that, you know, correction is not just healthy for the market, it's almost like necessary in order to preserve, you know, the health of the market, if that makes sense. It's like, you know, we've gone so far so fast that, you know, these forward PEs are just ridiculous. You know, like for example, somebody's asking me about you know, PSEC today. Yeah, it's definitely a depressed sort of you know, it's a depressed kind of asset, but it should be trading a lot higher than where it is. You know, they flip their net revenue around, that kind of thing, and then you turn that around to something like Nvidia. You know, it's like it's just printing money, but then you get people that start to ask questions, like you know, Michael Burry, right? Who's saying, well, you know, all these AI companies are selling to each other, and they're all kind of like building their own bubble around them. And you know, there's some fair point to that, but you know,
what I heard that was really interesting was that talking about Nvidia's PE, which is like 27 or something, and Costco is double that.
really,
Yeah, and Walmart is like double.
yeah.
So, I mean, compared to if they're selling it, if those kind of companies are selling it twice the PE of Nvidia, is it really overvalued?
Yeah, I mean, in my opinion, if you're 17% of U.S. GDP and you make more than the country of Russia,
Yeah.
and all you're doing is you're selling silicon-based GPUs, yeah, I'd say you're overvalued.
Well, maybe that's giving you a better picture of what's going on in Russia, though.
Yeah,
Not much.
True.
Not
That's
much.
true. I know. You know, it's and of course, you know, I could be totally wrong on that.
What did John McCain say? A gas station with nukes.
Yeah, pretty much. So I just think about the longer term prospects of the indexes, and I think about, you know, unemployment, and it kind of trickles down, and you know, you get people spending less. You know, like I'm seeing big discounts at car dealerships now. You know, a year ago that wasn't a thing. You know, I drove past our local power sports dealer, and you know, they can't really give those things away right now. You know, trying to sell a, you know, Polaris, what you may call it, for $40,000. You know, it's ridiculous. It's a lot of money. So I think that, you know, some of the people, like the high income earners, you know, like white collar jobs and stuff, are some of them, you know, with the layoffs that are impacted with tech and AI and stuff, you know, those are the people that buy those things. So, you know, we'll see what happens, but you know, usually it's a slowdown, and then the Fed lowers rates, and then eventually after that you get a pullback. But so to kind of like tie that back into what I see here, you know, stock market is not the real economy. That's true. But I also think that, you know, what we might be seeing here are some clues. Again, we get a big weekly exhaustion signal that fired. Same thing with the Nasdaq, and I also kind of see, you know, you can kind of pick out some other patterns too. Like you can pick out maybe a really large, like a wave 2, almost, maybe something like this. So this is also another another scenario I've been kind of toying around with, where you get this like mid pattern. Sorry, you get this kind of mid pattern. I did it again. That doesn't look right. Sorry. You could have some sort of like ending pattern here that truncates before. Well, like okay, the S&P did make a new top, sure. So it's probably not like that, but if you zoom out, this is also like another sort of longer term pattern here, where you get this big long trend line, and if it stays intact, it stays intact. So I'm always looking for a breach of this. Excuse me. I'm always looking for a breach of this, lower kind of level here. All right, but that's a not too likely of a scenario. I think probably what's more likely is we see this last little hurrah. Sorry again. I think we see this last little hurrah up to 7,000 or maybe 7,100, and everybody will be like, this is crazy, it's insane, whatever. Probably still keep going up. But I think this is probably your more likely scenario. I do think we will have some sort of pullback, but it really kind of depends on if the bulls step in a big way, and let's say you get a big buy up, like right around here, kind of give it some good support right around that 6,800 level we were talking about before, and then kind of jam it up higher, or you might see some accumulation for a day or two before you get another run up. So that's kind of what I'm thinking here for indexes, is that we get this kind of rebalancing, pull back a little bit, and then after that, either we get a new sprint to 7,000, or maybe we're just okay with the ES futures reaching 7,000 before we have our final ultimate top. But I still do think, though, last note on it is when you look at the weekly for all these the market indicators and things like that. I mean, you get these. It's a long-term game, and you get these good buy good buy signals at the bottom of these sort of things, but you also get some misfires like this guy up here, but you still get some sort of selling. And if you're looking at this, I mean, this is a log chart, so it's it's a little bit disproportionate to kind of how we see things on the regular chart today, but you do get some of these bigger signals that you see up here. If anything, at least a little bit of selling. And the only time it hasn't really worked has really been around here, where we had that pretty much Santa rally back in 23, and it just hasn't really stopped since then. The April sell-off kind of reminded me of like the COVID drop that got bought up right away, and you can't keep doing that and expect the money to keep flowing in. And now that we've made perpetual new highs here, and this is now the third year in a row. The first 2 years we've had 20+% gains, and then this year if we end 10% higher, I think it's only happened once in 127 years or something like that. I was reading on reading in the news, so that's significant. So again, I've been saying it for a while and I've been dead wrong. So it's been a little frustrating, but at the same time, you can kind of see these dips that have been bought have been on kind of low volume. Like you see a lot higher volume back in the day here with some of these other big sell days. So this brief 9-month bear market we had really, I think, was just a lot of profit taking and accumulation for the next push up. But we're kind of getting close to the end here, where I think now you can officially count like 5 waves, and it stays relatively intact here, versus you get a nice long tail on this, where you can kind of see this entire the 18 or however many year run this has been here, and things do come in large cycles like that. If you think about you go back, and I promise I won't drone on about this much more, but if you go back here, you look at October of 07, had a nice little weekly exhaustion indicator there, but we also had one back in March of 07, but you can kind of tell things were kind of slowing down. And if you look at the big major top pattern, it kind of looks similar, doesn't it? Like you've got this kind of megaphone looking thing that ends up just kind of breaking down. And once it heads down below that major support trend line, and in my opinion, that would be like the April low. If we do get some sort of break below the April low, then it's, I think we're toast for a while. But this was still a massive correction, back in 2008, and it was still like a 5-wave down sort of correction here. So I think that it is important to pay attention to some of these different signals. And while you might not get them all the time, you can at least start to see that they start to pop up at these different junctures, at least at the weekly level. So you can see the big buy indicators at the bottom, 10% pullbacks, and you can see a lot of these exhaustion signals. So but also you might get fooled. So it's kind of like you just kind of play the averages on it, where you do seem to get these nice buy indicators at these big epic bottoms, but sometimes you think there might be a continuation when there's not. And I remember, like, for example, this fooled me back in November of 23, but we did end up buying right around I think like a day or two before, and it ended up flipping. But and I think I closed my longs before it hit or I think when it hit the 2000 or the 200 daily moving average, but that didn't really help. so now I think they'll hopefully we get some sort of steam that blows off here. And it's not just because I want the market to go down because I have short positioning. It's because I want there to be a better dip to buy, because I can't confidently buy a dip and think like, oh, this is great. Like things are, sure, it might be overvalued, but like it's not that bad, But now we're starting to get up to the 40s or the high 30s with the Schiller PE, over time, we're starting to get a lot of these longer term, exhaustion signals. Now I'm thinking that, buying up here is really not a good idea, even if we do have a little bit more of a sprint. And I was kind of thinking of that through this entire section here, but I would much rather miss another 8 to 10% of a rally, and then start it here, buying a dip, as opposed to like buying a little micro dip here and then going on vacation and then getting wiped out. Like that happens. Okay, so that's the indexes. Yeah, we don't need to look at the Dow. Let me pull up some of this other stuff. Okay, so the yield. Can you guys see that now? Yield.
Yeah.
Okay, so looking at the yield, I do think that we're doing a little bit of consolidation here, and I think that you'll probably see. Before I say this, I do have credible evidence to back it up. There was an article that was talking about how CPI this month was manipulated because of it being delayed for 2 months from the government shutdown, and it was actually more inflationary than it was let along. So I don't know how credible that is. Like anybody can publish an article these days, but I would like to see the CPI read again and see and also like what the ADP payroll jobs or private payroll jobs data looks like, et cetera. But I think that we're seeing a lot of coiling here just because rates and things have been pretty low for a while, and I do think that you'll probably see it start to creep a little bit higher, because we're also seeing the high end of the yield creep up, that 30-year. Like I said before, bond traders, they're not dumb. They know what's going on. So I think we might get a little bit more of a pullback here, but I did end up adding adding 1 unit there of TMV today. So if it dips down a little bit lower, then I'll probably like maybe around like 4.06, something like that. I'll probably add another one. All right, so gold got a nice smackdown today. I don't think that this is the end for gold. I think it's probably like, it's kind of a convenient top though, 45.50. I think you could probably see, maybe like a 4,700 or something like that. I don't think that would be unreasonable considering how wave fives tend to extend. I just think this kind of looks like a wave four. There's a lot of volume here, but I do think that silver was kind of leading the way with this. Like, silver, if you kind of flip here real quick, it had this just massive blow off top, and then you got this big sell. But I think that enough people are trapped up here where you'll probably see a lot of effort in order to a lot of effort to just get some support down here. But if it does break down a little bit further, though, that's probably an invalidation. But I mean, we also kind of saw that with gold, where that didn't really come true either. So like, what was that with gold? You're gonna say something, Don?
Yeah, I mean, I have no idea what's going on with this market now. I mean, my long-term, from when I first bought it, and I said I had a long-term target of 72 in silver, and we went to 82. So
yeah.
So who knows what the hell? I mean, we're just back to where I thought it was going to get to.
Yeah, right. Yeah, I think right there with the bull target. What was that, bull target one? Yeah, right at the 71.34 or something like that.
Yeah.
Yeah. So you called it. Nice job.
But that was from 2 years ago.
Yeah. Yeah.
I mean, I didn't think it was going to happen this fast, but
yeah, nobody ever does. It just explodes. So I mean, look at the RSI. That's crazy. It's almost 90 plus.
Oh yeah, the options numbers were ridiculous.
Yeah, I bet.
Volatility is crazy.
So I do think I think that metals, they're not typically correlated with equities, but who knows what the hell's been going on this year.
Well, it's a squeeze is what was going on. There's just London has no silver.
Yeah, everything's getting squeezed. So I think probably what you'll see here is like, we did get this, really strong sell here with gold, and also too with silver. But I kind of think that like you will get some sort of bottom sometime in the near future, and highly likely you will see a recovery of at least half before maybe you.
That's what I'm looking to get out of a good amount if it retraces 50%, like around 75, 76, something like that.
Yeah, I think that's a good target there, because I mean you might get a bounce maybe at like 70 or 68, and then head back up to like 75 before you might get a move down like that. But again, you never know. But I still think that like there will be some sort of bounce or something. I mean, even when you had that big sell off in gold, a couple of weeks ago here, we had this. I was kind of thinking, maybe we'll have another sell down, but it's just been kind of bouncing on this 50 EMA for a while. And until it breaks through that with style, then it's still a long. So even if you do have, go ahead.
This decline did not break anything.
Right, and that's the crazy part.
Yeah,
this is like profit taking to me. Yeah, shaking out the weak hands.
Well, anybody that bought when the market opened last night is in a lot of trouble.
Yeah, that's right.
I mean, I watched it going up at the beginning. I'm going, what the hell is going on here? It was up $4 or $5, and then collapse. Yeah. That's how it goes. That's how they get you. But the ones the platinum and the palladium are the ones that really got clobbered.
Yeah, that's true. But so I think overall, metals will be good. But yeah, I also think too that like if you're going to see higher highs with equities, you're probably going to see higher highs with metals. So you get these big extension targets like 4.236, like highly likely it's going to get hit. So I do think that you probably will see 85, maybe even 85.7 before like a longer sort of term reversal. But I don't know, like if you have that's why blow up tops are so hard to forecast, just because you never know when it's going to collapse.
Well, you know what number is out there that people are talking about is 100. Is 100.
100?
Yeah.
Oh man.
that's what's all over the talking waves or whatever.
With talking ways. I remember we were talking here when it was down at 36 or 33. I'm thinking like, oh yeah, there's some consolidation here. We'll probably get some
Yeah.
buying, and then sure, it goes to space. Yeah,
Yep.
that's how it goes. Okay, so I guess like let it find a bottom here, but I plan on taking some calls out, like on some gold and silver and stuff. If/when there's a recovery, I think that again people are gonna kind of move to metals and commodities and stuff as as we see a lot of this international stuff kind of wind down, like maybe Russia, China, or the Russian Ukraine war. Maybe we'll get some spikes or whatever. But okay, so moving on to like oil and gas, kind of like what I was mentioning before. Gas or sorry, oil has been jumping up pretty quickly, which has been just beat down. But we did get another weekly buy signal here. We've been getting a couple, so it's been kind of you still kind of get a little bit of buying that happens after that. So the fact that we had like a lower low after we got this weekly buy signal tells me that there's just a lot of big boys stepping on price here. But I do also think that $60 a barrel or 62 is not unreasonable. So we kind of zoom out a little bit. Right around here when it was doing all this consolidating, like in this B wave, I still think we probably might see maybe reverse around like 60 or something like that. But I'll probably start to add some hedges around there. But until then, I'm still not too worried about it. They're not going to give it away for free. So I do have a relatively large long position open that I've been trying to close for a while. But you can always hedge basically risk free as it's doing this. But I don't want to like hedge too low. So anyways, so like you look at gas has been kind of trying to jump up here. You could see that declining volume. You're also starting to see a lot of this random buying and stuff, but it's been kind of tempered here by the 200 DMA. I do think that you'll see some appreciation there, probably sooner versus later, which would be good for the oil trade.
Well, the BOIL, the problem was the last couple of days, it was like changing from which contracts it was trading off of. And the front contract was not acting the same as the back contracts.
Yeah.
So you got days where oil was up and BOIL was doing nothing because it was trading off the like March.
Right.
And March was going down.
Yeah. Yeah. So hopefully you can get a decent spike here, like catch that last January, February kind of move, and then sell out of that. So that would be nice.
Well, we just need a cold snap.
That's right. Yeah, that's right. All right. So let's take a look at stocks here and a couple other things. So stocks, I think, is just kind of creeping up here. It actually kind of looks like a little head and shoulders pattern if you can kind of look close. But yeah, stocks is looking like a little micro Nasdaq, where you still have the same sort of patterns here, where you have it went a little bit higher with this leg than the Nasdaq did in general, but I still think that you'll have like these. You'll probably have another sell off here, like a B wave, or sorry, like a C wave. But it remains to be seen. But I was kind of, there's I forget who like named this pattern, but it kind of looks like a bat wing a little bit, or like a bat. You get this kind of like M looking thing. Let's just call it the mustache pattern.
Is the bat signal.
That's right. So those patterns to me are like a derivative of a head and shoulders pattern, where you could get a higher peak, like a double top. So like in the old school charting books, it's called like an Adam and Eve or an Adam and Adam or whatever. Doesn't really matter. It still kind of is reminiscent of like a double top. So, and I kind of think some of these other sorry, not Nvidia. but like some of these other stocks here, so like like Tesla, you've got this kind of little higher, but it still like makes a 5-wave here. These little stupid things that come out of nowhere. We'll talk about MSTR in a second, but long story short here is that I think you typically will see some sort of retreat here in price once you start to see these sort of things developing. Bitcoin is still getting hammered here. It's having a real hard time getting up above this 50 DMA here. And even though you do see some buy accumulation, I'm kind of waiting for a signal here. There hasn't really been any. It's been kind of like a controlled sort of crash. So, but I think it's probably going to consolidate a little bit more around here, then make like a new low, and then probably bounce. You can kind of see like MSTR is getting really, really punished here. But I also think too that it's a little oversold. You're getting a lot of accumulation down here, and there's kind of like a vacuum here. So even if we see like a 50% bounce, over time, or like I mean like a 50% retracement, you're already starting to get some buy signals here. So like the last one we got, as soon as we got that, then it jumped up. Let's see how much that was. It jumped up 23%, right? And then I do think that we'll probably hit this what is that? 145. Yeah, 145 is like the A equals C sort of low. If it gets any lower than that, I think the company might be toast. So, but you can still short it. So, anyways, I think we'll probably see something like this where if we do hit this like final target down here, more than likely you'll probably see some sort of like some sort of consolidation, maybe like a retest of this triangle that it got broken down out of, and that would be more than enough to exit MSTR, but or sorry, not MSTR, MSTU. But so now, like for example, I set a stop today on SMST because I don't want to close the short just yet because it's probably going to hit here, but I don't want to add either. So so it's like kind of stuck in the stuck in the trading nether regions where you don't really have a lot of good options here. You just gotta kind of let it do its thing, let it bottom, have some patience, and then when it does do some sort of turnaround here, highly likely it's going to be when Bitcoin does as well. So I don't know if I want to add any more to the position, but it's been so beaten up that adding to it I think is probably a good idea. Or sorry, like adding to the long side, but I still wanted the bottom first, and I wanted to like jump off the bottom. So so that's kind of it. I've been rambling for a while here, but yeah. So I think that's markets are a little bit down after hours here. To kind of wrap up, let me see if I can pick this out. Yeah. So I mean, I don't know if we'll have any continuation. Sorry, I'm all over the place. I don't think we'll really have much of a continuation here. Maybe we'll wake up and wake up at the point of control at like 68.50 or something, and then they'll buy it up into New Year's, something like that. I think that's possible. You might see something just for like the real short term, or you might see something like this overnight, and then you could see the like tomorrow, or you could see some selling. But yeah, it's really just it's one of two things. It's like this is either the first leg down of a larger C leg, or this is just a really controlled way to make a B wave and then shoot up the space into the first week of January. So just depends on how willing buyers are to step in front of the selling. All right. Any questions, comments, concerns?
Did you do anything with UAMY yet?
No, I did not. I set some alerts.
Yeah, I think it pulled back today to a pretty good area.
Okay.
Mm.
Let me look at that. Oh, 561. Yes. Yeah, that'd be good. I have an alert right here like support. So should have what was that day we were talking about? What was that, 480 or whatever?
Yeah, that's when you were talking about it.
Yeah, should have
Right,
bought.
the day before
Damn
the
it.
low.
Yeah. Hey, I guess the gut's working at some point.
I'm accumulating it. I mean, I think it's going to make another run back up. So I'm just going to keep buying a little at a time. And
yeah, there's a ton of buy delta below 540 or 540. So I would think that's pretty solid, pretty solid line there.
Whether you're in at 5 or you're in at 6, if it's going to 18, it doesn't matter.
Yeah, I agree. That'd probably be one that I'd buy. Do you have options or shares?
I have the shares. I looked at the options, didn't make sense to me.
Okay. Yeah, the options might not have a lot of liquidity, but excuse me. Again, my kids all have the plague again. But yeah, I'm probably going to buy some shares down here. I think there's a chance it might revisit down here.
It might. I'll have to buy some more. I'll buy some more if it does. But
yeah, I think that's a pretty safe.
I mean, obviously, if it gets over, what is it, like 650 there, then it's probably going to start to move.
Yeah, I think so, because you got to get past this, past a little bit of sell pressure here.
Right.
What I'd like to see is like a bounce off this 21-day moving average and head up to like 740 or something, and then you can start to see some buying.
Yeah, I mean, I'd like to see it too, but the longer it stays down here, the more I'll wind up buying, and then the better off I'll be longer.
Yep,
going
forward. I agree. Yeah, because they're not really making any more antimony, so not really any other company spinning up to manufacture it either. So
yeah.
Okay, so well, anything else before we wrap up here?
I guess that's pretty much it.
Okay. All right. Well, of course, I appreciate you guys joining, and
thank you.
Suffering through my rambling as always.
Torture.
Torture.